Welcome to the condensed version of the daily video update. This is a video that I do where I just go through the bullet points and some of the main charts to show you. If you want to get a deeper explanation of things, please go and watch the full-length video. It's just a little bit over 30 minutes today. This is being prepared for Thursday, July 20th. So what are some comments that we can make about Wednesday's action? There is a convergence of some negative signals that could lead to at least a short-term pullback. Right now, we have that with a question mark. We don't know if that will happen. We're not quite sure when it will happen, but our charts are indicating that this FOMO that has been in the market, the fear of missing out, is leading to kind of a frenzy. We've been overbought now for an extended period of time, and usually the market will pull back just out of normal reaction. We're seeing some things coming together that also produce evidence on our charts to suggest, right now anyway, if we do see a pullback, it should be just a pullback. If it really starts to gain momentum, we'll fall back and regroup and see if it's turning more negative. A lot of short covering that's been happening and FOMO, as I mentioned, have been preventing the markets from falling. The S&P did make another 52-week high. And the positive scenario is still continuing, where the market thinks we will have a soft landing. Yes, we're seeing economic slowdowns, but that may not result in a recession. That's what we call a soft landing. They're also under the belief that the Fed is almost finished with raising interest rates, but when looking forward, they still see that earnings growth will continue on. Taken together, this is a pretty positive scenario. But on a short-term basis, we have a long list of indicators that are extreme positive. We have our moving average steady, the CMB composite, the CCI 14 and 20, the Stochc RSI, Williams percent R, standard deviations chart, stochastics, the boom indicator based on 20 periods, and the RSI based on 9 periods. Not to be outdone, in the intermediate term, we also have a lot of overbought conditions with our balance of power, the Erin, the rate of change going back 50 periods, the PMO studies, our oscillators, and the oscillators that we follow right now are showing some improvement. There's still that negative divergence in the background. It's another negative divergence that I want to show you that we're really more concerned about. The Sean trend meter, the bullish percent index for the S&P 500 as well as the NASDAQ 100. The percent B has been coming down but is still a little bit extreme. The boom indicator based on 50 periods and the RSI based on 14 periods. And even in the long term, we have a couple of our moving averages that are looking a little extreme. The dollar advanced and interest rates were down. All of the yield curves that we follow still remain inverted. We're waiting to see if they're going to shift back into more of a normal type of an environment. Sentiment is still extreme positive. It was unchanged, but it still remains at 82. Our trend is positive, the green line's going up, but we're getting pretty toppy with our ADX indicator. However, it's above its moving average and both of them are above 20, suggesting that we are in a trend, but we might be getting extreme. Our bias is positive and our momentum is also positive. The economic reports that came out, we had the weekly MBA mortgage applications index. It came in up 1.1%. Last week it was up 0.9%. Refinancing applications were up 7%, where purchase applications were down 1%. Total housing starts were down 8% month over month. When you adjust that to an annual rate, that's at 1.434 million, lower than the 1.475 million they had expected. Building permits also declined, down 3.7% month over month. Annually, that adjusts to 1.440 million, lower than the 1.472 million they had expected. Here's the intraday chart. One of the first clues that I saw was, if you notice Monday and Tuesday's action, we had a higher open, but we really didn't gap. We just kind of drifted higher on both of those days. Well, on Wednesday, we saw a gap right up to R1, and then everything just stalled out at that point. That could have been a backlog of overnight orders from individual investors who see the market going up. They're afraid they're going to be left behind. They feel they need to do something, so they log into their account. They initiate an order to buy, which is then executed right when the market opens. As we went along during the day, we just drifted along R1. We eventually came back down, but never got to the unchanged level. We saw a little bit of buying later in the day, but then some selling as we went into the close. This is also another warning sign. We had another up day, but growth continues to underperform value. We were actually negative with our growth to value ratio. Also, we've been keeping an eye on this. This is the VIX to S&P 500 correlation. We have topped out and we're starting to come back down. Now, sometimes this can be positive and sometimes this can be negative. If you go back and look at the red lines and then what the S&P did after that, we don't really know what that means in and of itself. We have to put it in the context of some other indicators that we see. Also, the equity put call ratio, and I've added another line on here. Typically, we look at this at market bottoms when we really spike up and then start to come down. And then the more we go down, the more positive that is. Well, we've been dropping quite a bit under this 0.55 level, and that could be a warning sign. If you look at other times when we dropped below this, what did the market do at that time? Typically, it was negative. We're also looking at our trend indicator. The ADX is the black line. It is above the moving average and going higher, but we're getting close to that 40 level. The green line, which is why we default to the positive, it's already above 40 and continues to advance. Short term, it's a little more prevalent, where the ADX has already gone above 40. It is above its moving average, and the green line is also above 40, suggesting on a short-term basis that we've gone up pretty far, pretty fast. We're also looking at the daily chart where we're coming up to the underside of this upward sloping trend line. That could provide some overhead resistance. On the bottom, though, you see now for 2 days in a row, we were above average with volume. These oscillators that we follow day in and day out are showing a lot of improvement, except for the longer term oscillators. They're still pretty much flat. We still have this negative divergence, but as they turn back up, they are turning more positive. We are also seeing some improvement here with Dow theory. The Dow continues to go up. It's also being confirmed by the transports continuing to break out. We saw a little bit of a turn up with utilities, which put a little bit of pressure on the S&P 500. The NASDAQ, here's where we start to see another warning sign. It came up to this R2 level and has not been able to break through that. Is this going to present some short-term overhead resistance? We also look at the NASDAQ 100. It came up to this R2 level and is now starting to come back down. Is that going to produce some longer-term resistance? We also look at the NASDAQ 100 bullish percent index where it's giving us a very high reading. It's still going up, but if it starts to roll over and come down, that would be a negative signal. This is the new chart that I haven't shown, and I also went through this in the daily video, where we're seeing higher highs with the NASDAQ 100, but when we plot the PPO, which is a momentum oscillator, we're still seeing a longer-term negative divergence. And the scenario that I've developed for right now, it's really the NASDAQ 100 that took the market higher. If we start to see some weakness in the NASDAQ 100, it also could be what would take the market lower. Now, right now, if we do see some kind of a decline, and we don't know when that's going to start, it probably will be a short-term pullback because we are positive overall. If we start to see a pullback, then we'll fall back, regroup, evaluate things, and see if they're actually turning more negative. Also, with the FANG index, we're still above the previous all-time high. We came down a little bit in Wednesday's session. If we fall, will this provide some kind of support? Also, with our longer-term S&P 500 chart, we're still a little bit above this resistance level. Now, this is a weekly chart. We could come all the way back down and close underneath it, and this upward pointing bar that you see right now would go away. So, we still have 2 days for that to play out. Right now, it's looking positive, but we want to keep an eye on this. Also, with the NASDAQ 100 weekly chart, also, we're above this upward sloping trend line. This is also a weekly chart, so if we come down, that would turn things a little bit more negative. With the NASDAQ 100 to Dow ratio, we're still at a very high level. We could go higher than this. There's nothing to say that we have to stop here, but when we were at these high levels before, that did present a lot of problems for the market. So what's our outlook for Thursday? The technicals, we're still positive right now, but we're getting very overbought, and we're just kind of hanging out in overbought territory. We will be getting the weekly jobless claims, the Philadelphia Fed survey, existing home sales, and the leading indicators will be coming out. We're also keeping an eye on all the different geopolitical events, with the market still remaining fixated on inflation and interest rates. Here's the updated economic calendar so far for the week. Looking at the Stock Traders Almanac statistics, we are now in options expiration week. We tend to be up 57.1% of the time and down 42.9% of the time. For the day, though, historically, we're looking pretty positive for the Dow, S&P, and NASDAQ. We will be on the 13th trading day of the month. Please be reminded, tomorrow will be options expiration. But we see a little bit of a bounce right now, but then we see some weakness coming in after that. We're also keeping an eye on the NASDAQ, where we're coming up into the mid part of July before we tend to see some weakness. That could also feed over into the rest of the market. Our scenarios, we're not going with the downwind yet. Even though we see some warning signs, we don't have any confirmation of that based on price. However, we are overbought. We are still positive, but at the same time, we are overbought and there are some warning signs, so you might want to be a little careful there. We're not going with the sideways trend right now because our ADX is showing that we're in a strong trending environment. Our warning signs, we're seeing a convergence of signals that right now look short-term bearish. The S&P to VIX ratio that I went through, the 5-period simple moving average of the equity put-call ratio, it's really dropping to a low level. The negative divergences, not so much in the charts that we look at, but we're seeing that on the NASDAQ 100, and then we're coming into a weaker part of the month seasonally. Longer-term trend signals may be signaling a top. So far, we're above that, and it's not giving us that signal right now. Seasonally and historically, we're in a weaker part of the month. Our oscillators are still showing some negative divergence, but on the NASDAQ 100, we're seeing a more prevalent negative divergence. The VIX is showing a lot of complacency. There's just not a lot of fear now. That's why we've been watching the S&P to VIX ratio chart. The cumulative new highs, new lows for the NASDAQ continue to show weakness even though they turned up slightly. The 3-month yield is above where we were at back in 2007, right before the great financial crisis. The S&P 500 growth is still in an uptrend, but is weakening. And then we're coming into earnings season, which can be positive or negative. On the positive side, we do have the seasonality and setups that are longer term that remain in the background. Our special K daily chart is positive where the weekly chart is negative. The longer term equity put call ratio remains positive because it is declining. The S&P is still above the downtrend channel upper line. I haven't been showing that chart because we're far away from that line. We're still in a risk on posture. Lower price levels so far have been providing support, but we really haven't tested any of those levels, at least so far. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're still above breakout levels, but they're coming back from those pivot levels. The Staples to S&P 500 ratio is declining, and the small cap index, as measured by the Russell 2000, as well as the mid caps, have generated recent golden crosses, but the small cap index for the S&P has not, even though it's showing some improvement. Small and mid cap growth continues to be positive, and the Copic curve generated a recent buy signal. So our conclusion, the S&P remains positive, but it's overbought and there are some warning signs starting to creep in. Short term, we're positive and overbought. Intermediate term, we're also positive yet overbought, but we're still positive in the long term. Thank you. I hope you have a wonderful day. Please feel free to check out the full-length video, and I will talk to you in the next video.